Hello, Fools. I'm Asit Sharma, Senior Analyst and Lead Advisor at The Motley Fool, and my guest today is Jason Siemens, CEO of NamSys, which trades on the TSX Ventures Exchange in Canada under the symbol CTZ. NamSys is a software company that facilitates currency management and processing, including the logistics of transporting cash. NamSys is a small company with a market capitalization of 35 million Canadian dollars. So for our purposes, we can think of it as a nano-cap stock. Jason, welcome to the Motley Fool.
Great. Thanks for having me. Great to be here.
So Jason, let's begin with understanding your cash management niche in a world which is firmly headed down the path towards digital financial transactions. What's the problem NamSys is trying to solve, and what's the opportunity?
Well, first I'll comment that cash as a payment mechanism obviously is under pressure from electronic payments, but it is unique in that it can be operated offline, and it is settled at par with no transaction fees. And so it makes it a very important option for a lot of customers in the marketplace. 14% of all payments in North America are settled in cash. 24% of in-person payments are settled in cash. And it's really important for unbanked and underbanked consumers, which may not have access to the same credit and debit products that are available in the marketplace. So so that cash has been very resilient as a payment mechanism since COVID, and that is in North America as well as worldwide. And the other important aspect of cash is that even if a retailer is depositing $3,000 or $300, the fees associated with depositing that cash into the bank are relatively fixed. So it costs the same amount to transport the money to the bank, and the bank charges the same fees to count that money and deposit it into their account. So the relative cost for a retailer to be able to bank in cash is actually increasing over time as cash usage declines. So our goal as a software company is to make cash as efficient as possible so that it can remain competitive with electronic payments. And so what our software does is help to reduce the amount of miles that a truck might travel to deliver that cash to the bank, or it'll reduce the amount of time that it takes the bank to count that cash and deposit it into your account, and really just shorten and increase the velocity of the supply chain of cash.
So would I be right to assume that both a retailer and a bank would be customers of the same platform?
Correct. Our Cirreon platform is a cloud-based software as a service application that's used by all the different parties that are involved in that cash supply chain. And that includes, so the retailers use our software to help balance their stores and their cashiers and interact with their bank. We offer services to the cash transportation companies. Brand names that you might be familiar with would be like Brinks and Loomis that service that market. And we give them these companies the ability to track the pickup and delivery of bags of cash from origin to destination, capture signatures, GPS, all of the aspects of security that are very important when dealing with cash. You don't want to misplaced millions of dollars. So it's very important that we have an end-to-end audit trail. And then on the back end, when it actually reaches the cash processing, whether that's done by a bank or outsourced to another provider, we help operate the equipment that counts that cash, sorts it, and then prepares it for fulfillment back into the supply chain. So cash flows into the retailers, from the retailers to the banks, then the banks use that cash to then subsequently refill ATMs, and the cycle continues.
I was curious on the logistics side, the transportation of cash. Mm-hmm. Do you utilize equipment, say sensors, you mentioned GPS,
yes,
that are already owned by those transportation companies, or do you supply some IoT devices as part of your platform?
Yeah, we rely on Android-based devices that are on the truck, either fixed on the dashboard of the truck or carried by the employees themselves. And so from an outside view, it looks a lot like a standard courier software, much like a FedEx would use, where we're using the data that comes in from those devices to keep track of what's on that truck and where they have to go to next. And all that information is captured in the cloud.
Okay, so I'm getting persuaded here that I should stick to my day job and not try to hold up a Brinks truck. Sounds like the technology that you also help with is pretty robust these days.
Absolutely, yes.
Okay, so let's move on to what really drives the engine, the economic engine of NamSys. You've given us an overview of the software platform and the various services that are offered within that. What would you say is the biggest economic driver of your business out of what you've named?
Well, the first thing, all of our applications are delivered as pure software as a service, meaning there's a subscription based on active usage. So when we deliver our solutions to a client, whether that be a retail store or a transportation company, they're able to easily adopt our solution with no upfront payment, and they're easily able to scale that application up as they add stores or devices or clients to their network. So in this way, we're able to grow our business organically. So we have very little, we're proud to say we have very little churn. We have a lot of loyal customers because we try to deliver as much value as possible. And in addition to growing organically with these clients, we're also acquiring new customers in the market. And we're happy to say that we've got a sizable position in the market in the United States as well as the Caribbean and Mexico. And we're working hard to expand internationally as well.
And can you tell us a little bit about how you make more recurring revenue with a customer? Is this a consumption-based model? So the more that I consume, the more of your services I consume, the more you charge?
Yes.
I'm curious about how you actually charge your subscriptions.
Yeah. So, for example, in a cash and transit world, so we're to handle track the transportation of cash, we're invoicing on a per truck basis. So as they expand their operations, they're adding employees, they're adding vehicles. It's a per vehicle charge in that case. And so, as they grow their business, we grow with them.
Okay. And now, as you're describing this operation, it seems very complex. Here's something I was surprised to read about your company. You have actually, first of all, you're a remote-only organization.
Correct.
Is that still correct?
Mm-hmm.
And you go ahead and tell me, how many employees do you have?
I think we just hired number 21.
Number 21.
Mm-hmm.
So this is sort of incredible to me. Can you give us the breakdown of your employees, the ones who are actually developing and maintaining the software versus those who are out in the sales function versus those who are out in the field with customer service? That's a very small group at the run rate of business that you achieve.
Right. Well, the majority of those employees are actively involved in development and product support. So each one of our products has its own dedicated team of engineers. We're very slim on the sales side, so we have one salesperson in Europe that handles our international sales, and myself that handles the domestic market in North America and the Caribbean. And that's worked well for us because we are it is a very narrow vertical market. And so the number of customers and clients that we have to target is quite limited in a lot of countries. Cash processing and transportation is a consolidated industry, and so with a limited number of salespeople, we can actually target quite a few clients just via trade shows and conferences. We also rely on a lot of word of mouth and sort of reputational sales as we get introduced to new clients by our current customers.
I'm guessing that you all use quite a bit of AI in your operations to be able to pull this off and grow at the same time.
Yeah, in two aspects, really. So internally, we use as many AI coding tools that we can, mainly to facilitate documentation, testing, and our audit controls that we have as part of our SOC2 and our ISO 27001 certifications. And then externally for our customers and our products, we integrate a lot of what could be referred to as AI-based functionality in terms of route optimization. So we we make sure that the their network of trucks is operating in the most efficient way possible, as well as cash forecasting, meaning that we try to predict where the cash is going to be and whether an ATM or a smart safe will become full or empty before expected, so that we can do service in advance of things going offline.
Just out of pure personal curiosity, which tools do you all find, and you don't have to name any, let's say, very strategic tools, but just broadly, what have you found is very helpful to achieve these objectives?
So internally, we use a lot of the GitHub Copilot tools. Atlassian's new Rovo product has been very beneficial for us. And then we're very much a Google shop. So we use a lot of the Google Gemini platform to assist with our tools internally. Okay.
So a very technology-forward company operating very, I would say, in a lean fashion, where word of mouth can help acquire new customers, vertically integrated industry and operation. So the next question is obviously, how do you guys deal with competition from some giants? I think of Fiserv. I think of so many companies that could easily play in the logistics business or on the processing side. I think of Brinks themselves. I mean, why don't these big companies come and take your niche away?
I think what makes us unique is that we're one of those companies that's focused on this industry just exclusively. And so, we've spent 35 years building up a library of best practices and knowledge that we can use to help our customers. So more than just, software, we operate as almost a consulting firm for a lot of our clients, where we are bringing them the best practices as well as any kind of technical innovations that can help their business operate more efficiently. And for our competitors often have, it may be one division of Fiserv that has a competing product. And so they're obviously a much larger entity. But we think that because of our focus, we're able to just deliver better product more effectively. And that's helped us keep ourselves competitive.
So you're right now talking with me just outside of Toronto, out in the country.
That's right.
And we were chatting before we began about how much I like the little towns and just even getting out to Toronto, drive from the U.S. to visit some of my wife's family. But let's step over to the United States. I'm very curious. The dollar has seen a lot of depreciation over the last 12 months. Is that a net positive for your business? How does that work with the currency translation? You report in Canadian dollars.
Yeah, it's definitely a net negative for us. So 75% of our sales are to the United States, and then a 95+% of our sales are actually made in U.S. dollars. So even when we sell internationally, we price it in U.S. dollars. And so any kind of fluctuations in that exchange rate definitely hit our top and bottom lines. We've been able to navigate these fluctuations in the past, but definitely we prefer a strong U.S. dollar and a weak Canadian dollar.
I do too, actually, for when we visit my wife's family. Let's stay in North America, though. I think Mexico is also a big market.
That's right.
For your company. So can you talk to us a little bit about the opportunity there? Mexico, as we know, is a manufacturing powerhouse, but it also resembles some of the rest of Latin America in that you have more unbanked customers there, and cash is a larger proportion of the total transactional bucket.
That's right. So in Mexico, 60% of payments are made in cash, much larger unbanked and underbanked population. And what that means is that there's just more of an incentive for companies to invest in cash management technology that they might not have previously had. So we're really excited about Mexico. It's been our fastest growing market in recent years. and we're able to help the retailers balance their cash on a daily basis, as well as get that the funds deposited into their banks sooner.
What would be your next two priorities in terms of countries? Where are you focusing beyond Mexico that will give you the greatest yield for such a lean operation?
Mm-hmm.
From talking to you, I don't get the sense that you're going to unjudiciously pour a bunch of your balance sheet into the next opportunity. So where are you looking next?
So we're looking. We've got a pretty broad vision, but we have a strategy for Europe and Africa. Would be our sort of next markets, and we already have a customers in those regions, and we're going to look to expand those. And we also find Australia very interesting. So yeah, those are where we're targeting right now, and we've to facilitate that. We've got an employee in the UK to help us sell into that hemisphere, and then we are also have a new employee in Australia.
I'm curious with the evolution of payment systems like M-Pesa in Kenya and the just flexibility that country has exhibited and its openness to innovation with cash and cash movement. Is that a target market of yours within Africa? It's also a pretty big economy there.
Yeah, I mean, that's what you really have to look at is even with mobile payments and products like M-Pesa, growing in popularity very rapidly. I mean, if anything, a lot of these countries are kind of leapfrogging into this new digital area quicker than North America ever did. We still see cash in circulation, and again, back to our thesis, it doesn't really matter the volume of cash. It doesn't matter so much of it as the existence of cash, because as long as cash exists in an economy, the tools to secure it and transport and process it will be required.
So I was curious about your balance sheet.
Mm-hmm.
It's a pretty clean balance sheet. You have no long-term debt.
Right.
Again, as a relatively small company, you have the option to just build that up over time, or maybe utilize some of it in a very small acquisition, or perhaps even to invest in a few more employees. Perhaps if you wanted to turn up that sales lever. Of course, we know with additional sales, you have to be able to service them.
Yep.
So that entails another chain of thought process for you all. But I was curious, how do you look as a relatively smaller company? How do you look at your balance sheet? Is it just something to accrue the earnings for some future allocation, or do you have a specific plan for the assets that are sitting there?
Yeah. So we have no debt. Our last report, we were, I think, $9.5 million approximately in cash on the balance sheet. So it makes our price to book quite attractive, around under 3.5 times. And so our strategy with that cash has been to use it for a future acquisition. And so we've been actively evaluating different companies, but we are quite conservative around our selection criteria. So we don't want to have a company that's too big that that we can't absorb or integrate into our operations. We want a company that is within the space. Again, we think that key to our success has been focusing on cash and cash as a payment mechanism. So we don't want to diverge significantly from that. And we want a company that's compatible with us culturally and technologically, so that we can have an acquisition that's successful, that is immediately accretive. We don't necessarily want to buy a company that's struggling. And unfortunately, in this industry, that list of companies is quite short, and the list of companies that are eager to sell is also short. So. It's our evaluations continue, our search continues, and we think that we will come upon the best candidate soon. But that is our strategy. All the options though are on the table. At board meetings we actively speak of dividends and special dividends and share buybacks. We do have a share buyback program in place. We did a special dividend recently. So those are options as well.
Mm-hmm. And meanwhile, when we look at the income statement, you all are fairly profitable. So I'm just scanning the last 12 months of operations. These are in Canadian dollars, but $2.4 million of net income on $7.8 million of revenue. And so that's, we call it high 20s%, going on up to, close to 30%.
Yeah.
Will you become more profitable as you scale, or are you pretty much at sort of the peak equation for your business at these types of returns?
Well, we'd always like margins to be higher, but we are, more of an enterprise software as a service company, and so we think that the margin, the window that we're in is probably a healthy spot. Certainly, we don't want to have margins explode and be under investing in new products and under investing in supporting customers and putting that zero churn at risk. So we envision it's going to be somewhere close to what it is right now going forward. We don't see that dramatically changing, but certainly the margins are quite healthy.
Mm-hmm. What type of compounded annual growth rate on the top line do you think your company is capable of sustaining if we were to stretch to a period of, say, 5 years or even 10 years? What do you target as an appropriate growth level?
Well, historically, we've landed somewhere between 10 and 20% per year, and so we think that is a good rate for this particular market. So overall, the cash processing transportation market grows at approximately 4 or 5% per year globally. And so when we can hit 10, 15, 20%, we think that's pretty good. That means we're capturing more of the market.
Do you ever have any suitors come knocking at your size with such an established operation, fairly profitable?
Definitely. The company hits a lot of the metrics that people are looking for. The company is pretty closely held as far as our shareholder ownership, and so making that kind of transaction work is a little bit just requires more effort from the buyer to meet our expectations of a sale. We want to deliver the best value for our shareholders, and right now the market cap of the company, I wouldn't say that we're inexpensive. So definitely we'd be looking at more of a strategic buyer than someone that's outside of this space.
Mm-hmm. I want to look at some risks, but before we do that, just before we talk about that, let's go back to technology.
Mm-hmm.
And the use of artificial intelligence, which you all seem very capably utilizing. And you yourself, I believe, are a programmer by training.
That's right. Yeah.
So I was curious, when you look at your business, you have a great, lean software as a service platform serving enterprise customers. Do you ever investigate lateral either industries or business lines that you can maybe go into to grow at an even faster pace? Does that ever come up, or are you more, look, let's stick to our knitting. We have this niche.
Yeah.
We're good at it. We want to stay focused on what we're doing.
Definitely the latter. I mean, if you looked at a lot of our technology, it has a lot of similarities to last mile delivery software in terms of transportation. In terms of some of our device monitoring technology, it has a lot of similarities to basic kiosk monitoring, making sure that cash management devices stay online and up. But those other markets, we have a handful of competitors here. If we went into the last mile delivery service space, we would have thousands of competitors, and so it would just be very different. I think it would take a big investment, and if anything, we wouldn't be able to leverage our experience that we have in cash management and transportation. So as when we're talking about AI and how it's going to affect software and vertical software companies like ourselves, I think it's really important to recognize the value of the company isn't really in the code It's in that knowledge of the industry and knowledge of best practices. And the software is just leveraging that experience and knowledge. And so whether that code gets written by AI or whether it gets written by a programmer by hand, I think the end result is the same. Our customers aren't necessarily, they're buying a product, they're buying a service, but really that is just the output of our 35 years of experience.
Got it. So let's talk about risks now, and I'll start with one or two obvious ones, and we'll circle into something more narrow. Okay, so biggest one. I'm just introduced to your company. We said this at the outset. The industry is growing at a 4 to 5% rate just now, the cash processing industry. Over time, that probably will slow down a bit as things become ever more digitized. So how do you deal with that risk? The playing field is large, and we understand that you're expanding geographically, but just the constraint that the industry itself is inevitably going to slow. How do you deal with that risk?
Well, we're shifting our focus on our product mix a little bit so that we can address a broader portion of the market, including more direct retail sales rather than selling to purely cash in transit and bank companies. And so by diversifying that customer base, we think we can continue to grow revenues above that 5% rate. So when it comes to revenue growth, our strategy is always multi-pronged. It's not a singular effort. So it really is just a combination of growing our product portfolio, expanding our list of customers and the total addressable list of customers, and then as well as the international expansion.
Got it. And then with the employee base that you have, I love how much leverage you get out of so few employees, but you must have some risk if a couple or a few key people leave.
Yeah.
It's hard to replace them overnight. How do you build some redundancy into your operation? How do you protect against a very knowledgeable person who has years of history with your company and is well regarded by his or her compatriots on the customer side?
Yep.
Just walking away and deciding, hey, I want to do something else. I want to change. How do you deal with that?
That's a great question. And so we're aware of that risk. We mitigate it in a couple different ways. So first of all, we develop as a platform first. So instead of having independent products, we have a core foundation for all of our different applications. And so this allows us to move experts from one product domain to another. So we kind of cross-train them so that there's never any scenario where there's one person who just is the absolute only expert in the company about that space. So there's redundancy there. And we have a lot of employees that we like to have long-term employees, and so we invest in them and we make sure that they want to stick around with us long term.
Do you offer them stock in the company? Are some of your longer-term employees shareholders?
Yeah, we do. So we have an options program that is for all the employees in the company, which I think is quite unique for a company of our size. It's not just management, so everyone can benefit from the overall success of the organization.
So, Jason, you're running the company. What's the risk that you most worry about? What keeps you up at night?
So, cybersecurity is definitely always top of mind. So like I said, we have our SOC 2 and our ISO certifications that, through our annual audits, give our customers some assurance that we're handling their data responsibly and that the company is operating well. But definitely the day-to-day, threats are out there. And so we are very security minded, very cybersecurity minded. But protecting that customer data, but that is always a risk for us. We're dealing with very important mission critical systems.
So in the few minutes that we have left, I'd like to do two things. The first is a little bit of a visioning exercise. Mm-hmm. So I'm an investor who's found your company, very intrigued by it. Small company, big market. In what scenario do you outperform the expectations I might have, which already are, I think, fairly high, which is you could be a grower, it's a 20% grower for a number of years to come.
Yep.
In best case, or a good case scenario, how do you potentially exceed that? What has to happen or what might happen for that to be an even better picture?
Yeah. So, one thing that I think we're close to realizing, especially in markets like the United States, is that, Cirreon as a platform is a real reality, meaning that instead of just being a software service that we're supplying to industry players, that we become more of a global provider of cash services. And what this means is that I describe it as sort of the Visa for cash, meaning that anybody could use the Cirreon platform to transact in cash universally with multiple providers seamlessly and without any kind of friction. And I think we're getting to that point in the market where we have coverage in 35 states. So if a retailer wants to send their cash to the bank, they can deal with multiple companies that all use the common Cirreon platform. And so as we become more of a brand name in the industry, and people are asking for our product specifically when it comes to cash services, we think that that can be leveraged to provide more of a broader solution to the kind of cash economy rather than selling to individual service providers.
George Kurtz, who's the CEO of CrowdStrike, often makes the distinction between the word platform that so many companies throw around and the idea of a true platform business, which obviously they strive to become. So what you're describing sounds to me like the second, the latter, that you would grow into a destination.
That's right.
Who didn't want to have to worry about having multiple one-off relationships, just to go to your platform to handle many different needs.
Exactly. So we can then leverage the kind of the network effect that's starting to take place. And I think we're close to that critical mass.
Okay, great. And then before we wrap up, tell us a little bit about NamSys's culture. It seems that you must be a tight-knit group. I mean, everyone knows everyone else.
That's right.
You're not so big that you have to look up someone's bio before you talk to them.
That's right.
Would love to hear a little bit more about that, and also where your employees are located. Are you all close together there in Toronto? Are you spread around? I know you've got one person, obviously, in Europe who's handling your sales.
So geographically, most of us are still in the Toronto area. We pre-COVID, we did have an office, and we did have an office where everyone came into. But going remote, we were always very cloud oriented. So moving our systems wasn't so much of an issue, but we did have to change our management practices when we went remote. But the benefits have been significant. Operating as a small software company in Toronto has challenges around hiring. I mean, we are competing for engineers that can go to work for Google or Microsoft or Facebook down in the city, and so we have to provide a compelling reason for them to come work for us, and having the flexibility of being able to be located outside of a metropolitan area has been really really important. Now, as far as the culture of the company, we are just very customer focused. We like to put programmers and developers in front of the customers, so that they can hear about problems or they can hear about new requests firsthand. We eliminate all of that kind of broken telephone that can sometimes happen when a customer request comes through and has to go through 4 different layers before it ends up on a junior programmer's desk.
I want to get an engineer when I call AT&T. I wish they'd put me in touch straight with someone who's working on code. That would be so great.
That's what we like to do. Shorten that communication cycle, and that allows us to deliver things a lot more quickly. We're just very product and detail focused. So we don't talk a lot about roadmaps and kind of vaporware, and it's more of what can we do to deliver results today, and that's what I think customers appreciate us for.
Jason Siemens, this has been an illuminating conversation. I really appreciate the time that you've taken today to explain what NamSys does to us. I wish you all the best going forward.
Thank you. Appreciate the time.